Good day, ladies and gentlemen. So today I want to teach you a very simple strategy which you can use. Okay, it's called the moving average crossover strategy. All right, so this is a very simple strategy that anybody can apply and use it to make money in the forex markets. While you're learning the more complex strategies, okay, liquidity sweep, breaker block, order blocks, all those SMC ideologies and the rest. All right, you can use this simpler model, okay, because this is a very simple model anybody can actually apply. You can use it to be making money by the side while you're learning the more complex model. So I'll show you the the settings of the moving averages and also how to apply them. So let's go there. Once you are on your MT4 or MT5, just come to this icon right here. Can you see that? So that icon stands for indicator. So you click on it, you click on the icon. All right, then you click on this in order to add an indicator that you want. Okay, scroll down to moving average. You can see moving average right here. Please, your moving average. Yeah, so that's the guy we need. That's what we need. So click on that moving average. All right, now pay attention to this setting. If you want to screenshot these aspects, please do, so you won't forget the setting or use a different setting. All right, so your period must be 5. Your period has to be 5. This is going to be 0, just as it is. I think the default setting is 0 for that aspect. Is the period that you would need to change. Method should be exponential, not simple. Okay, it has to be exponential, not simple. What else? Apply to close. Okay, by default it's always closed. Then the style, this depends on you, but you can use my own style. I prefer using blue. Okay, so 5 minutes period right here, 5, and also blue. Turn this to 4 pixel so that the line will be more visible. Okay, once you're done with that, you click on done at the top right here. You see that? You click on done, so you'll be done with that particular setting. Done. Let me see if it's there now. Okay, yeah, I have it there. All right, so I'll add another moving average by clicking on this icon again, the same icon I clicked on before. So you need 2 moving averages. Moving average. Okay, so this time around, instead of 5, you change this one to 10. Okay, you change it to 10. Every other thing remains the same, just change it to 10. The other thing you have to change is this part. I need a different color here, so I'll be able to differentiate between the 5 period, which is the first one I did, 5 period moving average, and this one, which is 10 period moving average. Okay, so I'll turn this to let's use a red color. Okay, so now once I see the red line, I know that it's for the 10. Okay, and when I see the blue line, it will be for the for the 5. So let's go back to the charts. Everything will be on the chart now. Okay, so I have the blue and the red on the charts. Okay, let me turn the blue to black so it will be more obvious. I don't want it to, the blue is like aligning with the color of the candle. Okay, let me change that. I want to change this blue to black, so I'll have black and red. Done. Okay, all right, now it's better. Okay, the red, you can also change it to a different color, because I can see that the red is also aligning with that, but I won't waste time trying to change that. Let's just go. Let me explain how to go about it. So the black, which is your 5 period moving average, once it crosses the red, okay, don't forget that the red is 10. Once it crosses the red, you enter a buy position. Okay, so let's just look for examples. If it crosses and goes above, you're looking for buy. If it crosses and goes below, you're going to be selling. Okay, so you can see what happened here. Right here, the black cross and went over the red. Okay, the question you now ask yourself is, which candle actually caused that cross? Okay, and that's this candle. So that will give you an idea of where to place your stop loss. Your stop loss has to be below the candle that caused the crossover. Okay, the last candle that caused the crossover is what you use. You place your stop loss below that, then you target 1 to 1, 1 to 2. It all depends. You can trail your stop, to know where to actually take your profits. And as you can see, stop loss below this, stop loss somewhere here. Let's say your stop loss is gonna be here below these parts. Okay, this will be your SL. And what happened? Let's see what happened. Price came down but did not touch the stop loss because you placed it below this. So price came down here but did not touch the stop loss, but later went up. You would have made money in the upward direction. You can see it's still going up, so that's what's up. And right here something is happening. You can see the black 5-period moving average is crossing the what? It's crossing the red right here. Do you see that? So your stop loss is going to be above this candle. This is the candle that caused the crossover. Okay, your stop loss will be above this candle, SL, a few pips, maybe 1 pip, 2 pips, it depends, above that candle, and you target either 1 to 1, 1 to 2, or you trail your stop. Okay, until you take your profits. And let's see what happened. You can see price move down, down, down. Okay, so this is a very simple strategy you can just use to make money, in the markets. So what happened here? There's another cross around here. Okay, so which candle caused the cross? This red candle right here, this small red candle is what caused the cross. Okay, so place your stop loss below that, somewhere here. Okay, SL, and you take a buy position. It didn't really go too far, just gave us a big candle, single candle, and started moving down. Okay, so let's see if we have another crossover, black crossing over. Okay, so I have black crossing over around here. So this candle caused the crossover. You place your stop loss right here, and let's see what happened. Market came to hit the stop loss. It didn't really go down as we would expect, so that would have been a losing trade right there. Okay, so something else you need to know, which is the only issue with this particular strategy, is that when the market is consolidating, it gives some false signals. Okay, it works perfectly when the market is trending, either trending upwards or downwards. So the reason why I'm explaining why this part did not work out, this one did not work out and hit our stop loss. Why? Because market was consolidating. Okay, there was consolidation going on here. All right, so aside from that, if it's a trending market, just forget about it. You are certainly going to be in profits, because the moving average kind of gives you a very, very good entry. So right here, black crossed over red. Okay, place your stop loss above this candle that caused the crossover. That's this candle right here. And what happened? Market moved down, retraced again, but did not get to our stop loss. Let's see what happened. Let me shift the charts a bit. Okay, this would have placed our stop loss somewhere here. Okay, this retracement would have taken us out if we are still holding. So those that scalped from year to year would have made money. All right, so that's why I said your what's it called, your profit target should be 1 to 1 or 1 to 2. So from 1 to 1, you should be taking out some of your positions. Okay, sometimes it gives short profits and sometimes it gives very, very big profits, especially if you catch the beginning of a trend, just like we have around here. You can see this crossover taking place here. Sometimes if the candle that caused the crossover is too big and you feel the stop loss is something you cannot risk, just leave the trade. You always have another opportunity. You can see this candle that caused the crossover is even small. This is the candle that caused the crossover, it's small. So this one would have given you very, very small risk and big reward. Because look at this candle caused a crossover. Okay, that small candle, I would have placed my stop loss just above it, and you can see the potential, that it gave me, the kind of profits that I would have made when it comes to this particular trade. So when you see a crossover and the candle that caused the crossover is kind of big, what that implies is that your stop loss is going to be above or below that candle. So if you check it and the stop loss is too wide, like it's too big, it's best you just leave the trade, because stop loss is what it is. Okay, it can still get it, you understand? So if the position is such that what you're going to be losing, it's something you cannot bear based on your own risk management strategy, it's best to let the trade go. You will certainly see some other trades that the candle that caused the crossover will be kind of small, just like this one that I just marked out now. So if it is small, it means you placing your stop loss above it, the stop loss will not be that big. Okay, it will be kind of small, and you can see the kind of profits that this one gave on this trade. All right, so basically that's just how to apply the strategy. I have another crossover around here. You can see this is the candle that caused the crossover, SL, stop loss around here, and markets move down. All right, so if you got any value, please subscribe and turn on the notification bell. If you got any question, you can ask in the comment section. I'll see you in the next video. Thanks for watching.